Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we're diving into a recent 10K filing. Think of it as a company's annual diary, but instead of secrets, it's filled with numbers and warnings about the future. This one's going to be a wild ride full of freeze-dried dreams and some harsh financial realities. It's like Willy Wonka went bankrupt. Let's get started. First up, the usual forward-looking statements disclaimer. Basically, they are saying, hey, we're going to make some predictions, but no promises. Every company has them. It's just a way to avoid lawsuits if things don't go as planned. This section is warning you that the future is uncertain. Next, a note about the market and industry data they use. It is important to know that while they trust their sources, they have not verified the information themselves, so take any growth predictions with a grain of salt. And with that out of the way, let's dig in. Scroll it item one business scroll. This is where Sow Good tells us what they actually do. They are a freeze-dried candy and snack manufacturer. Freeze-drying gives candy a unique flavor and texture, and they sell their treats in about 3,000 stores in the United States. They custom-built their freeze-drying facility in Texas. They remove almost all the moisture resulting in the United States. They custom-built their freeze-drying facility in Texas. They remove almost all the moisture, resulting in these hyper-crunchy and hyper-flavorful treats. Now let's look at some of the challenges they see ahead. These risk factors are important because they tell us what could go wrong. One of the biggest risks is competition. They operate in a highly competitive industry and they might struggle to keep up with bigger, more established companies. Another risk is their reliance on a small number of suppliers. If those suppliers run into trouble, it could disrupt Sow Good's ability to get the materials they need to make their treats. Diversifying their supply network is something they are focusing on to mitigate this. Scroll it item in a risk factor scroll too. Let's dive a bit deeper into those risk factors since they paint a pretty clear picture of the challenges this company faces. They have a limited operating history and have been losing money, and they might not be able to achieve or sustain profitability. Basically, they are still trying to figure things out. Their rapid growth in the past may not continue in the future, and their limited operating history makes it difficult to assess their future. They're essentially saying, don't get too excited about our past performance, it might not last. They also admit they may be unable to manage their future growth effectively, which could make it difficult to execute their business strategy. Growing too fast can be a problem if you're not prepared for it. Also, the retail food and candy segments are super competitive, and if someone comes and offers a better price, Sow Good could go down. Scroll it item 2 prof scroll. Now let's see where they're doing all this freeze-drying magic. They don't own any real property. They lease their facilities. Their main office and manufacturing plant is in Irving, Texas, and they lease other space in Dallas too. Scroll it to 5 Matthew 5 to Strand Cubbin 5. Market for registrants grow. Time to talk about the stock. Their common stock started trading on the Nasdaq Capital Market in May 2024 under the ticker symbol SG before that. It was on the over-the-counter market. The price has been pretty volatile, which means it can go up or down a lot in a short period of time. They have never paid dividends on their stock and don't plan to anytime soon. This is important since you can't count on cash payouts. Scroll it item 7 Macudar 7. Management's DS, Accession and scrolled. Now let's get to the real meat of this report, management's discussion and analysis of financial condition and results of operations. This section is supposed to give us the inside scoop on how the company is doing. They talk about factors that could affect their operating results, such as fluctuations in food, supply, transportation, and shipping costs. If these costs go up, it could eat into their profits. Here we see that sales of freeze-dried candy were about $32 million for the year, compared to $16 million the prior year, an increase of nearly 100%. But there's a catch. While revenue increased, cost of goods sold also rose significantly. Digging deeper, they incurred significant increase in salaries and benefits because they granted stock options to employees. That's not always a bad thing. Also, other general and administrative expenses also increased quite a bit because of facility costs and marketing. All these increased expenses also increased quite a bit because of facility costs and marketing. All these increased expenses resulted in significant decline. During the third and fourth quarters of 2024, the net loss before tax provision for the year was $3.6 million compared to a loss of $3 money. Looking ahead, they acknowledge they need to find an investor with greater financial resources to stay afloat and compete. They also mention the challenges of keeping and growing their distribution network, so more stores will continue to sell their product. Basically, it will be a challenge to attract customers. This is crucial for them to reach more consumers. Then there's the stark reminder that our customers are not obligated to continue purchasing products from us. This means if Sow Good doesn't perform in the eyes of big retailers like Target and Five Below, these clients could stop stocking Sow Good and find another freeze-dried candy vendor. Despite the challenges, they optimistically believe their treats could represent a multi-billion-dollar total addressable market. However, we don't have confirmation or data other than their belief, so take that with a grain of salt. Scroller type 9A can tell us 9A. Contentals and Preacher scroll. Let's also check internal controls over financial reporting, where the CEO and CFO admit they don't expect all errors and fraud to be prevented, which sounds about right because no system is perfect. The audit committee is in charge, making sure everything is properly accounted for. It sounds like they take cybersecurity seriously too, which is essential in today's world. Now, as the last point, they make it clear they're not aware of any cybersecurity threats, but it is just a matter of time, which is not very reassuring. Finally, let's look at the auditor's opinion. The auditor, Irish Popek & Co., gives a relatively clean opinion, stating that the company's financial statements are presented fairly. However, the auditor emphasizes that the company has suffered recurring losses from operations, raising substantial doubt about its ability to continue as a going concern. Now, let's step back and take a look at the big picture. Sow Good is at a very interesting point. The numbers paint a picture of a business struggling to balance rapid expansion with profitability. Their belief in a multi-billion-dollar market seems more like hope. The company is burning a lot of cash to grow, which may be a problem. They have a lot of risk factors, but most stem from one key problem, which is that they have not been able to make any profits. There's potential, but plenty of risks need to be addressed before they can become a truly successful company. Thanks for watching, and don't forget to like, comment, and subscribe. What are your takes on Sow Good? Let me know in the comments.